Nischal, morning. How are you guys calling the market now over the next month or two? Do you expect more volatility and more downside possibility, or do you think we pretty much have a base in place?
I think Udayan, volatility is going to continue because we are approaching the budget. But we have seen strong buying around the Nifty 200-day levels, which is around 4650. Having said that, I think fundamentally you are evenly poised at around 16 and a half times. As far as India is concerned, I don't see much of a concern. Your credit policy is out of the way. We have not seen any interest rate hikes out there except for a hike in the CRR rate. Fundamentally, most of the last quarter results have been pretty strong. Do not have much budgetary expectations. So the only thing which has been at the back of the market's mind has been the risk appetite, which has gone down after the events happening in Europe across the world. So as the things improve, I think markets are going to see better days again.
Nischal, morning. The body blow, though, has been coming to the commodity space. On either of these stocks, do you guys have a buy or a call, Hindalco or Tata Steel?
We have a buy on both of them. Our call on Tata Steel continues to remain that Chorus is going to do better in the coming year. We are seeing that Chorus capacity utilization going up next year, as well as EBITDA margins also improving for Chorus. So we have a positive stance for Tata Steel. Similarly for Hindalco also, we continue to believe both on the capacity utilization as well as margins front, you're going to see better days for Hindalco in the next year. So both the stocks we have a buy.
Do you guys track NMDC, Nischal? Very large cap company, low float, going in for an FPO. At 490, do you think it's fully valued, or can you justify upsides fundamentally?
We have yet to do then work on that. We do not track the stock. I do believe the valuation wise the stock is priced more than the fair value. That's a back of the envelope kind of a calculation which I have right now, but we need to do some more work as we get some more data basically after the analyst meet which the government will post after an FPO. Then we will be able to come out with a proper analysis there.
What are you guys positioned on cement as at this point in time at Edelweiss?
We are negative on the space, Udayan. We continue to believe that in the coming quarters you are going to see pressures coming because the capacity addition is going to be more than the demand. Our estimates on the demand is around 9 to 10% growth in the current year, and the capacity addition is close to around 20% plus in the sector. Our estimates show us that by the end of FY11 you will have a surplus capacity of somewhere around 20 million tons. So that's why we believe that the cement prices are going to be continuously under pressure. We have seen some run-up happening in the current quarter, but I think that is more to do with that the cement prices have been pushed down too much. So cost price increases which has happened basically is pushing up the prices now for the moment, but we do not see much demand coming in.
Any thoughts on film exhibition? That's the space that's been hogging the limelight.
Pardon me?
The film exhibition stories, Nischal, Fame, Inox, PVR.
I think given if you look back into that industry actually, given whenever the economy is in an upturn, this particular sector starts to do pretty well, and obviously it depends upon a lot on how the movies have been. But the general occupancy levels go up whenever there is a upturn in the economy, and I think in the last 2 quarters you see the results for most of them have been pretty good. The last quarter particularly would have been good for them because a few of their films have done well, especially for PVR. But I think the occupancy levels are at around 34-35% right now, and that would make most of these guys profitable in the current quarter and the next.
Nischal, do you see this kind of a ranging, sedate kind of a move for the market till the budget? Because in the comeback, it does not seem to have great momentum yet.
Yes, Udayan, I see market either just moving sideways basically because nobody wants to right now take any position till the budget is out. Not that people are expecting too much from the budget, but it's an event and actually people just want to get this event out of the place before they want to once again start looking at a new position. As far as FIs are concerned, I think they are still worried about what's happening in Europe on those 2, 3, 4 countries which have been in a sort of a problem. So as soon as you get a bailout package coming from the either Eurozone or a bailout package from the Norwegian government, any of these things happen, basically you would see risk appetite coming back once again into the market, and some of these, especially the large caps, once again moving. But I think for the moment it could be quiet.
Nischal, any thoughts on the most spectacular listing of the last year, Jubilant FoodWorks, and whether you would chase the stock even from here?
We were also surprised with the way the stock is performed actually. I think at around the listing, at the issue price, we also believe that it was a bit underpriced. But I think at the current prices it seems to be fully valued. Given that it's only a franchisee and there is enough amount of competition on the ground. So I think that around 244, 245 seems to be a fair value for the stock.
Asking you about the kind of institutional selling we've been seeing in the cash market and what you think is leading to it.
Okay, I think a couple of things. Actually, what has happened in Europe actually spooked most of the investors. That's why the second thing I would say is the valuations. I think at around 17-18 times India was fairly valued. So the first thing everybody wanted to do was take away some of the profits, because in the last year a lot of everybody was sitting on a pile of profits. So the selling came through. The second thing, I think a lot of selling came through from the ETFs. They are the guys basically who just come in at one go and just take it out. So the larger amount of selling which we saw on our desk was from the ETFs actually, and they largely come and impact the large caps, so directly impacting the Sensex or the Nifty. So that's why you saw the whole market reacting, because the frontline stocks start getting hammered. Then the whole market starts reacting to that, and everybody then starts taking profit out. So largely these two things.